TradeTheMBI.com. This is John. This report is for the 10th of October. Well, there you have it. That pivot of the MBI magenta we were waiting for took place early on, and we saw the continuation here of the orange on the DOC rising. When that started the other day, we knew there was concern, and of course, below the 23% was sort of a given. And sure enough, we got that bifurcation here, and shorts jumped back in, and there weren't really any longs left as we peaked out here with the steel short-term buyers, and they began to fade out because they didn't have anything left, and there were just a whole lot of people willing to get out. And of course, you had some people calling them the canaries in the coal mine, but we would just say that it's just evidence of what we've known early on in the year as things would start to decay quickly. You had AMD, FedEx, both dramatically missing not just earnings, but their guidance. As FedEx pointed out, things just sort of like fell off a cliff. And it's like, that's exactly what happens when interest rates rise to a certain point. It just, people are reach an uncertainty point and they freeze. And whenever you have uncertainty, people freeze. And that freezing is no economic activity and or a defensive activity. And that's exactly what we're seeing here. You can see it from the NQ as well, headed back to the zero, which actually happening earlier. We'll get that dip of magenta below white, and that will be that certain point there. But this is that idea that you can just talk your way out of the realities, and you can't. This is the Euro story. Who wants a ECB bond? Nobody. The only people who are going to buy them are the ECB. And so, what does the EU do at that point when the only people buying them are their central bank? And at that point, you got to use your euros to buy dollars to pay for the oil and the LNG that you now have to import because miraculously Nord Stream 1 and 2 are blown up because for certain that the Germans would have caved to the Russians at some point as people start freezing in that. So now what are they doing? They're buying coal at record levels. They've had huge meetings in South Africa and other places. So it's like all the green energy they were talking about, they're just going to go back to dirty options. And it still isn't going to be enough. And there aren't enough LNG tankers out there to supply the EU because they're committed to other places and there just aren't enough. So it's interesting. And then you have, of course, the war with OPEC beginning as they're cutting production. We talked about this the other day, and that's only going to escalate things. So all this to support Ukraine. And backdrop of that, though, is still the fact that this was coming regardless, simply because of the massive spending and the irrational use that just hyperextended supply chain disruptions and just a complete lack of understanding of basic economics. That's really what it comes down to. This was not rocket science, and they just really, well, you could put in your expletive. Um, TLT, which at the 150 range, it was an easy call that this was going back below 100 has been my call all along, and well, we're still above it. Hasn't happened yet, but at 100.99, it's going to happen because the Fed is made the determination that they are okay with unemployment as long as it curbs inflation. And they see that as demand, and people losing their job is demand in their view, and they want to cut demand. And by doing so, this is why OPEC was making it, and we talked about it, they're making their defensive action because the U.S. keeps throwing more oil onto the market with the strategic reserve. Um, and they're looking at it saying, hey, this is not a fair market, and we'll make it fair by cutting our production and keeping prices where they would be if you were not artificially intervening. U.S. doesn't like that, but welcome to the big leagues. Gold suffering under that selling, and that's not a surprise within the normal context of its back and forth, because when you really get into the consistency of what the Fed is saying, they're looking to destroy demand to a large degree. And the question will be whether or not after the election there will be an ability to stimulate at least from a congressional standpoint. Looks like that could end if things don't go well for the party in power. So that creates a whole different deflationary cycle. But this is where you see the euro is going to continue to fall apart as long as this continues to do what it's doing. What are we up over 12 bucks in a week per barrel, and that's going to have an impact because now we're back over that 90 range, and as that continues to escalate towards 100, you're going to continue to see it impact real people. It was interesting. I was listening to a woman who had a business who was in cosmology, and she was talking about how inflation wasn't causing the slowness. It's just people back to school and things like that. And I'm just like, that these are the head in the sand ostrich kind of thinking. The reality is things are decaying much quicker than people realize. Real estate is the next and of course, that's going to be more market by market, but we've already seen that impact in various places that were soft before are going to get a whole lot softer and a lot quicker. And that just explodes itself into other areas from construction on down. So, um, notwithstanding the dramatic cost increases for building and things like that. So these are real world situations. And interestingly enough, though, they're going to be more impactful in certain areas depending on their policies. And those that don't have good energy infrastructure and that are really going to suffer quite a bit. And again, Bitcoin, like we were talking about, as an alternative here, suffering far less given what we just saw in the market. The same thing with Ethereum, not really having that same catastrophic breakdown because you've ripped out all those weak hands now. They're gone. And so now it becomes a question, does new money move into it to stave off this kind of decay? And, we filled back all these positive extremes and things that started from the irrational run up. And, I've been pretty vocal about how even at these levels, I think we're still way, way over realistic numbers from a valuation, particularly as the business situation decays quickly. Um, you counter that with the devaluation of the dollar and the automatic pump that creates. Still, several hundred more points at a minimum, and then it depends on how severe the economic pullback will be. And you can see this starting here, and then boom, fell off the cliff right there, came back. Coincidentally, or not so coincidentally, right to the previous algo of 3708. Eh, yeah. And then we kind of bounced back and forth on that algo, but couldn't hold it, and that's when it broke down free range. And there were additional algos that we could have had marked in there, but nonetheless, doing exactly what the expectations are. This was an interesting one here where we had the white spike, magenta stayed above, then a little bit of the breakdown. It held up one more time, but broke down below that white over 40, and that led to the move back to the zero. And then we just ended up with a series of these same situations occurring regularly. It just makes it so easy to see how that's going to play out over the time. And I think it's dynamically exciting. It's exactly what we expected would be the case for October. It's not going to be any different throughout the month. I think this is just going to be more of the same back and forth, and you just have to be prepared for it and flexible. Because even within these declines, there's still going to be some rallies that will be, rip your face off tears, as they like to refer to it. So adapt, be flexible, and you'll be fine. As always, though, trade well. We'll talk again later. Look for me on the Skype chat.